Yeah, one question from BPP Kit. This is question number 84, Oscar Company. This is from Working Capital Management. Question is not really very difficult. But this is a very popular and common topic about factoring and collection of receivables. We'll start reading this question together, and I will explain you that while reading the question, which areas you should pay attention, and how do you make a picture in your mind. So it has three parts actually. Part A says calculate the cost and benefits of each of option 1 and option 2 and comment on your findings. By the way, these options are given by the factor. So, for collection of receivables and paying them some fee, and we need to compare these two options and which one is more beneficial. And then it says, and comment on your findings. So probably there are some workings, and workings will have marks, maybe 6 marks. If I see that, in general, if I see that, probably they will say 3 marks on calculation of option 1, 3 marks on calculation of option 2, and then 2 marks for comments. So keep in mind the marking scheme, okay? Then part B says discuss reasons other than cost and benefits already calculated here. Reasons. So you will not be talking about the costing reasons or the financial benefit, other reasons. Why Oscar Company may benefit from the services offered by the factoring company. So here we will not be talking about the financial, reason for that. We will be talking about other reasons. And then it says discuss 3 factors which determine the level of a company's investment in working capital. This is for 6 marks. Okay. So we start reading the question. It is very important to learn how to read the question, because reading the question is very important, because this is the the process which will make you prepare, or which will make a picture in your mind what is happening. So let's start reading it. It says Oscar Company designs and produces tracking devices. By the way, do not try to read very fast. Your reading speed should be the same as your grasping speed and the speed at which you can make picture in your mind. You need to understand the scenario, okay? So there is no use of reading it very fast without understanding. So Oscar Company designs and produces tracking devices. The company is managed by its 4 founders who lack business administration skills. Why do they tell me this thing? Actually, this is something which you might be using in your discussion. Just imagine they could have, this sentence is complete without this thing. Why this information is given? Every piece of information which is given, it has some purpose. If I say the company is managed by its 4 founders, even if I do not say that thing, still this was enough. But they tell you that the company is managed by its 4 founders, and they lack business skills, okay? So something is now coming to your mind. What is happening? Already you have a little bit of idea that people who are managing the business, they are not really expert managers. The company has revenue of 28 million and all sales are on 30 days credit. Its major customers are large multinational car manufacturing companies and are often late in paying their invoices. Oh, you understand, a small company supplying to large customers, and customers are paying late in invoices. Oscar Company is a rapidly growing company. So on one side, we are growing very fast, so we need funds, but our customers are paying us late. And revenue has doubled in the last 4 years. Oscar Company has focused in this time on product development and customer service, and managing trade receivable has been neglected. See, managing trade receivable has been neglected because we were focusing on bringing new products, capturing the market, so we were not paying focus at that. Oscar Company's average trade receivable are currently 5.37 million. Here, I will immediately pick up a calculator because they told me, I will not read further. I just want to make a picture in my mind what is happening. Their revenues are 28 million and they offer 30 days credit. So if I divide 30 days means 1 month. So 28 divided 28 million, if I take 28 million and I divide it by 12, my receivables should be 2.33 million. What I did, 28 million divided by 12. The last month, because I'm giving 30 days credit. So let's suppose if my end of the year is December, so only December sales should be my receivable end of the year. I should have collected everything from November, right? So on 31st of December, all the sales from September, October, November should have been collected. Only December sales will be paid in January. So it means that my average receivable should be 2.33 million, but it says 5.37 million. And actually 5.37 million means that probably my receivables are policies 30 days, but realistically it is 60 days receivable. So you are getting late. And you know that when you are not able to collect your receivables, you have to finance them. And that is going to cost you, because you have to take money from the bank to support the operations. So this is one number. You know, if you read the entire question and then try to do it, then things will mix up in your mind. You know, it is just like a puzzle when we start putting pieces into place. Okay, and bad debts are 2% of credit sales revenue, 2% of credit sales revenue, which is huge. I mean, so this is my cost. So here what I see that because of this receivable which has been neglected, two things are hitting me, are hitting this company. One, extra receivable, and which will cost them the finance cost. And then the credit sales revenue, 2% are bad debts. This is also a cost and a significant cost. Partly as a result of poor credit control, the company has suffered a shortage of cash and has recently reached its overdraft limit. That is very obvious. I mean, the way you are doing the business, you would actually run out of cash, and they have already reached its overdraft limit. Reached overdraft limit means that you have used or utilized all of your overdraft and probably you cannot get more. The four founders have spent large amounts of time chasing customers for payment. Why do they give you this information? Is it the job of the founders, the company owners, to chase the receivables? I think they should have better things to do in life. This is the job for receivable accountant. Now, either they do not have the receivable accountant or the receivable accounting department working in place, or maybe the accounting department is not competent enough. And as a result, these four founders, they are, trying to get back the money, which is not their job. So these are the two things. This is going to become part of the discussion, okay? You need to identify the areas. Remember, I always say, if you have watched my videos, I repeat it many times, that the answer lies within the question. The answer lies within the question. The issues which they expect you to discuss, they always give you a clue in the question. It is not possible, and usually they don't expect you to discuss those things which are not related. You already have to discuss the things which are related to the scenario, which are relevant to the scenario. So what I found here, it's been neglected, it's been delayed. Founders, they lack business skills. Founders are chasing the payments. You can imagine what is happening in this company. In an attempt to improve trade receivable management, Oscar Company has approached a factoring company. So finally, the founders, they realize that they cannot manage it, and this is going beyond their capacity. So they are talking to a factoring company. A factoring company is which will pay you cash in advance, and then they will receive that money from the customers themselves. So what you get is, you get immediate cash. So when you talk to a factor, what happened immediately? What happens? You get instant cash, so your liquidity improves. you get instant cash from a factor. So your liquidity improves. You save on interest expense because you don't now pay, because you get extra cash now. So your bank loans will go down, your credit limits will go down, and you will pay less interest to the bank. But then what is bad for you is that you need to pay to factor. This is your cost, pay to factor. So this is actually your gain. This is your gain, and this is your cost. The factoring company has offered two possible options. So now you need to make some kind of comparison what options they are giving us. Number one option, and by the way, in factoring, in most cases, they give us options based on recourse. We call it with recourse, and we call it without recourse. Without recourse. These are the two types of factoring which is done, okay? With recourse means that company is responsible. Let me just write it down. And here I say factor is responsible. Factor takes the risk. Factor is responsible. Now, what does that mean? Let me just explain you before I continue my reading. You know, let's suppose this is Alpha company. Alpha company has some receivable from a customer, you know, $100. So customer owes to Alpha $100, but customer has to pay this money in 30 days. Alpha needs it today. Alpha goes to a factor, and Alpha says that, you know, I have a customer who has to give me $100 in 30 days, but I need cash today. So factor says, no problem. I will give you $97 today, and I will take from your customer $100. So this is usually what happens in factoring. And by the way, there are two words, invoice discounting and factoring. They both serve the same purpose. The difference is that in invoice discounting, you pick up or select some specific invoices and then go to the factor. For example, oh, this is a very big invoice. It is $100,000 and I need cash now. I'm really in need of cash. So I go to my factor and I say, see, I've got this invoice of 100,000. Customer has to pay me in 1 month's time or 2 months' time. So you discount it for me, which means that you take this invoice. So actually I'm selling receivable. You call it selling the receivable. So I say, you take this invoice for 100,000, you receive from my customer after 1 month, but you give me today $97,000. So I get $97,000 cash immediately, and the factor will receive from my customer $100 after 1 month. So factor earns $3 because he has cash. So he earns $3 because of the availability of cash, and I get my 97 and I do my job, whatever I need for funds for. This is the process. In invoice discounting, this process is done on individual invoice basis. Sometimes I go, sometimes I do not go. I say, okay, right now I've got a lot of cash. I don't need services of the factor. So I don't do it. It is called invoice discounting. But when you talk about factoring, there are two words, invoice discounting and factoring. In factoring, you give all of the invoices to the factor. You make a blanket contract that whether my invoice is for $100, for $1,000 or $10,000, doesn't matter. All invoices will be transferred to you. All of my receivables will be transferred to you, not the selected ones. I mean, the job is the same, purpose is the same, but in invoice discounting, it is done for selected invoices. In factoring, it is done for all of the invoices, entire receivables. Now, the question what arises is What if after 1 month, this customer refuses to pay? The factor has already given me $97. And when the time comes in, the customer goes bankrupt or the customer refuses to pay or some other problem arises. Then what will happen? Because factor has already given me my money. And I said, go to my customer and take money. And 1 month later, when the factor goes there, he finds out that the customer has gone bankrupt or whatever. The money is not collected. Then what will happen? Will the factor come back and ask me that, Mr. Ali, your customer is not paying money. What do I do? Give me my money. Will it happen? What will happen? So here you've got two types of factoring. One is called with recourse. One is called without recourse. In with recourse, what happens? That, let me just write it down here. In with recourse, risk is with the company. In without recourse, risk is transferred to the factor. Risk is transferred to the factor. So if I do with recourse, it means I'm telling my factor that this is my customer who has to pay after 1 month. You give me 97 today. If the customer does not pay, come back to me and I will pay you. Okay, so I'm actually keeping the risk with myself. So factor is safe. Factor is not under any risk. But in case of without recourse, I tell to the factor that this is the customer who has to pay $100 after 1 month. Go and take money. But if the customer does not give you money, then it is your loss. I cannot do anything. I cannot do anything. So here, factor is taking the risk. And definitely, you should understand that factor will charge more for without recourse because he's taking the risk. This is, we are doing financial management, but this factor issue also comes in financial reporting, like your FR and SBR. So don't want to go into that detail, but because we have started the topic and because you are ACCA students, so you know financial reporting you might have done before or you might be doing tomorrow. So I'll just tell you that in with recourse, where the risk is with us, we do not remove the receivables from our balance sheet because we are still keeping the risk with us until the customer will pay. So when we receive 97 from the factor, we will say debit cash 97 and we will say credit liability 97. So we keep a liability tag. So we don't touch the receivable until the customer will pay. This receivable will remain on my balance sheet and I will book a liability towards the factor until my customer will not pay to them. That makes sense. In case of without recourse, because I have told to the factor that whether my customer pays or does not pay, I'm not concerned. It will be between you and the customer. I'm out of the game. In that case, because I am just getting rid of that customer, I will say debit 97, which is my cash. And I will say debit my P&L 3. Okay, P&L, the expense. Okay, let me just write it down like this. Debit my cash, I got 97. I put it as this. Debit my P&L, my expense, which is 3. And I will remove the receivable from my balance sheet. I will say debit credit receivable 100. So you see, in without recourse, I remove my receivable. I say I don't have this receivable anymore. Now it is between the factor and the customer. Anyways, you understand that with recourse and without recourse. This was important to explain before we start reading these options, okay? So option 1, administration by the factor of Oscar companies invoicing. So this is one of the benefits of factoring because now we don't have a receivable accountant. We don't manage our receivable. All of the invoices are transferred to the factor and then factor will do administration of the invoices. You know, which invoice is due, from whom to collect, how to collect, etc. So administration by the factor of Oscar companies invoices. sales accounting, and receivable collection on a full recourse basis. Full recourse basis means factor is not taking the risk. The company, Oscar company, still has the risk. If the customers will not pay, Oscar company will have to give back money to the factor. The factor would charge a service fee of 0.5% of credit sales. This is going to be my benefit. I'm sorry, my expense. This is going to be my cost. I'm going to pay 0.5% to the factor on my credit sales of 28 million. Oscar company estimates that this would result in savings of 30,000 per year in administration cost, because all this thing, invoicing, accounting, receivable collection, will be done by the factor. So I will say goodbye to my receivable accountant. I will say to receivable accountant, you are not needed now. So this is going to be my savings. So I will save money here. Under this arrangement, the average trade receivable collection period would be 30 days. Now, right now, I have 5.37 million of receivable, which is approximately 60 days or more. But after factoring arrangement, I've got only 30 days receivable. You know how much will be my receivable? Can I calculate now? I want to see. Currently, my receivables are 5.37 million. They are given in the question, 28 million. And if it is 30 days, I will divide it with 12, which means 1 month receivable. My new receivables will be 2.33 million. I mean, currently I have receivables of 5.37 million. After I get a signed contract with the factor, my receivables are expected to decrease to 2.33. So approximately it is 3.07 million. I will have extra cash. And what I do with this, I will go to my bank and I will return my loan. I will return my overdraft. And then when I return my loan, I save interest cost there. So what is happening? Because of this decrease in receivable, I'm saving interest expense, but then I have to, and then I'm making a saving of $30,000. So what I'm saving here, I'm making two savings. One, interest, plus 30,000 in administration. These two are my savings. Interest on 3 million. And these are my savings. What are my costs? I have to pay 0.5% to the factor on 28 million. This is my cost. This is my saving. I will find out the cost and the saving, and I need to compare. This is option number 1. Option number 2, let's see. It says administration by the factor of Oscar's invoicing, accounting, receivable collection on a non-recourse basis. See, non-recourse. In non-recourse, I'm transferring the risk to the factor. Factor is charging 1.5% this time. Before it was only 5%. In non-recourse, it is charging me 3% more fee. 3% more. Remember before it here, it is saying that you've got 28 million. Let me write down the numbers so you can see that how bigger it will be. It will have an impact. It is 0.5%. In this case, it is 28 million into 1.5%, which is a very huge fee. Factor is going to take 1.5, 3 times the factor fee will increase. But you know what happens? They told us that there are 2% bad debt. If I pay this fee to the factor, 2% of 28 million I'm going to save here. 2% of 28 million I'm going to save. I don't need any calculations. I will straight go for this option. I will straight go for this option because factor is only charging me 1% extra. Here it was 0.5%. Here it is 1.5%. So factor is charging me 1% extra, but I will get rid of my bad debts. I will not have any bad debts anymore. Bad debts will be the problem for factor. It's not my problem. It looks fantastic. I mean, simple mathematics can compare it. Okay. I mean, it looks like the second option is great. but we have to prove it with numbers. Right now, I'm not doing any numbers. I'm just explaining the question. When you are in exam, you will do it much faster. I'm not in exam. I'm just trying to be more comprehensive. Administration cost savings and average trade receivable collection will remain as number one. Yeah, that should remain number one, like 30,000 of savings. Oscar company would be required to accept an advance of 80% of credit sales when invoices are raised at an interest rate of 9%. Now, that's an additional cost actually. So factor says that when he gives us this money, he would be charging us 9%. That is an additional cost for us. 9% we have to pay to the factor. But then we will make saving of 7% because I take money from the factor, I return back my loan, I save 7% from the bank, and this is 7%. Oscar company pays interest 7%. And 2%, 9% I give here. So there is an additional cost of 2%, actually. Additional cost of 2%. Now let's start making these numbers together. You've got any question until here, please ask me before I start making the calculations. Any question you want to ask, please? Okay. So we've got here option 1. My current receivables. We always need to start with, because when we bring in factor, the first thing is that we are actually trying to decrease the receivables. So what are the current receivables? 5.37 million. What we should be doing here, 537,000. Okay, I put 3 zeros on the top. Actually, it should be like this. 537 million. 5.37 million, right? If I put 3 zeros on the top, so then it is 537. 5.37 million. 5.37 million. So 5,370,000 divided by 1,000. So this is how you should be writing down 5370 current receivables. Your new receivables, those will be 28 million. So 28 million, I'll just write it down here, divided by 12, because they say that after factor comes in, you will have 30 days credit. 30 days receivable means that 1 month. So I divided with 12 months. So then I see that, this is one major number you need to find out, because everything will depend on here. So decrease in receivable will be 3037. And if I put here my Oscar company's interest rate or overdraft rate, which is 7%. So it means this is actually your saving, which is 212. Okay. 213,000, you can call it, or 212,000, whatever you may call it. Okay. 213,000 it is actually. If you are not comfortable with these zeros, I mean, I am more comfortable with 3 zeros. If you feel that, okay, what is 5370, what is 213, you want to see numbers. Usually when you will be doing my questions with me in investment appraisal, we will always consider 3 zeros on the top so that we don't have to write down a lot of zeros. But sometimes students in the beginning, they think that, oh, what is this number? 5370. So you actually, if you are confused with that thing, you can actually be using all the zeros so that the picture becomes clear in your mind, okay? So you might be feeling more comfortable with these numbers. Now it looks like millions, or now it looks like 100,000 or whatever, okay? So you can say that, okay, I've got my Oscar company interest rate, okay? So your savings are 212,567. This is your interest rate saving because this I calculated on this number. Okay. Because your receivables will go down, you will return the loan and you will make a saving of 212,567. Okay. Then what else is there? This is also, by the way, sometimes we do it with, now this is something I'm going to explain you that how it will happen. Sometimes this happens that when you do ratio calculations and others, you divide it with months and sometimes you divide it with 12. So if you are taking your numbers with, with 12, the months, then you do all the numbers with months. It is also possible that you might wish to decide it with 365, the number of days, and times 30. So this will give you very accurate, how to say, accuracy will come also here. Because if I take it with 12, because in some months there are 30 days, in some months there are 31 days. There is not going to be a very material difference. But if I follow months, then throughout I will follow months. If I follow days, then throughout I will follow the days. And end of the time, the result will be the same. So either you choose that I'm going to use the days, and then throughout you will use 365 or other things. Or if you say I'm going to use 12, then throughout you will be using 12. End of the time, in the end, the answer will be the same in both cases. So this is your interest rate, interest savings. Now, what do you have here? So I say that benefit from option 1 is savings in interest expense, which is 214,000. Then I have reduction in admin expenses, in admin costs, which was given 30,000. So I can say that my total benefit here, total benefit from this transaction, there are only two things here. In this one, there are only two things. It is total benefit, is benefit is here from option 1. If I say cost of option 1, cost of option 1 is factor fee. And factor says he will charge us 0.5% of the receivables. And how much that makes up to? That is 140,000. Okay. So this is only one cost with factor. He will straight charge you 0.5%. There is no other cost. And you will say net benefit, net gain loss on option 1. And I'll see, okay, this is my gain, benefit, this is my loss, and I can say that 104,000. So this is the net result for your option 1. If you accept his first option, you will be making a gain of 104,804. Now, if we want to see that what happens in case of option 2, let me just drag it up somewhere. And I'll say that option 2. In option 2, what will happen? See, I can take these things here, okay? I can take this thing here. What will happen? In option 2, again, I will have this same interest saving, which was there because my, receivable will decrease by the same amount. Reduction cost will be there. But then there will be a further benefit. There will be a further benefit because option 2 was about full recourse. So bad debt reduction. You will get a saving on bad debt. Let's call it savings on bad debts. And you were making 2%. It said in the question that there were 2% of the bad debts. So this is also going to be my benefit. And if I see now, I just take it here. So 804,000, okay? My total benefit here is 804,000 because this thing has come in new because of the factor with full recourse. And the cost of option 2, if I see factor fee, factor said that he will charge me 28 million into 1.5%. This is the fee which is going to charge us. But this is not the only fee he is going to charge us. He is actually charging us something else as well. Remember here it says that the factor company would be required to accept, Oscar company would be required to accept 80% of the credit sales when invoices are raised at an interest rate of 9%. 9% is the interest rate here, which we have to, we will receive this fund from him and we have to pay him 9%. So what will happen this? Interest cost to factor, okay? Which is 28 million into 80%, I think. Yeah, into 9%. Are you guys with me or am I doing it for myself? Are you with me? Okay, good. So that is like, it looks like huge number. If you see now, you will say, this factor is not doing good to us because it is making something like 2.43 million. That option is a very wild option. It does not make sense that I get a benefit of 804 and I pay 2.346 million to the factor. Doesn't make sense. But you are forgetting one thing. When the factor will give you this money, you will take this cash and close your bank loan and you will make it savings from bank interest, okay? So this money, what will happen? That your cost is 7%. The same money you will put into the bank. And you will make a saving on this thing. Now it makes it 7%, 80%. Still it is not. Where am I? Okay. 868. Initially this option looked better. Did I make some error in the calculation? Let me see. Yeah, it looks okay now. This is my cost of the option 2 and net gain loss on option 2. I just saw these numbers. The numbers, logically it was actually, it looked better here. But then I saw that they have to pay 2% more. So this is going to be more expensive because this 2% was not here, okay? So this, when we saw that we are saving 2% bad debt, that's fine. But then we have to pay 2% more here. Yeah, so option number 2 is not good actually. So net gain loss here will be this one. So if you agree with the option 2 from the factor, in which the factor says that I take your bad debts. So initially you might be tempted that, I've got my bad debts on 560,000. And if the factor takes away this thing, that would be good for me. But then you understand that the factor is charging more fee. Instead of taking 204,000, factor will be taking 420,000. So factor fee goes up. Plus, the factor will charge us interest. So how much is the difference actually if I want to see? My factor fee goes up by 205,000. And then if I see the additional interest charged by the factor, that is 448,000. That's a big money. So it does not look nice. So we should be going on option number 1. It says to you that calculate the cost and benefit of each option and comment on your finding. So how would you do comment here? Now remember, in this type of questions, your comment, your discussion is not from the book. It is not about academic discussion. It is about comment on the same situation, which you already have concluded. So you should be saying that we have got two options. Option one is without recourse and option one is with full recourse. Full recourse is option one and option two is without recourse. And in full recourse, we see that there's a net gain loss of 104,000, whereas in option, we make a gain for 104,804. And in option two, there is a loss of 63,196. So we consider that option one should be adopted by Oscar company. The reason for the reason for making a loss in option two is the additional 2% of the interest cost, which we have to pay to the factor because we are going to pay him 9%. And then 7%, even if we pay out our bank loan, still it costs us 2% additional. So this is how you should just make a 2-line comment because it says that it is only for 2 marks, okay? So you've got any comments here, anything you want to ask, please discuss. So, then we discuss this part B. It says discuss reasons other than cost and benefits already calculated, why Oscar company may benefit from the services offered by the factoring company. So what are the factors other than this financial benefit? We know that there's a financial benefit of 104,000 or whatever we should be going for that. That makes sense. But is there anything else as well? So yes, here you should be talking about the non-financial factors, non-financial reasons for accepting this offer. So I should start with, if I have to write this answer. So I'm not going to type in everything. I will mention the headings only, and then we can make some discussion. So I would say that apart from the financial reasons for accepting the offer from the factor, there are certain other factors as well, which Oscar company should consider. So just one line as an introduction that apart from the financial benefits from this offer, there are some other reasons as well that why Oscar company should accept this offer. Number one is to free the management. This is for me the most important one. Currently, we can see that the founders of the company, which are the senior management, they are chasing the invoices, which actually is not something which is desirable. In fact, these 4 managers, which are the senior position holders, they should be working more on value addition things, or they should be working more on growing the business and towards the new product development and expanding the business instead of chasing the receivables. This is point number 1. And this is exactly what happens in real life, okay? Step number 2, factor has specialized skills. Oscar company might not be having specialized staff for collection of receivable, whereas the factors, they are professional in this field. And when you bring in factors, for them, it is much more easier and smooth to develop the relationship with, and by the way, this is a real life issue, by the way. If I have my receivable accountant, I'll tell you now, instead of doing this, I will speak this answer a little later. Let me share with you personal experience. If I have my accountant who is not a professional receivable accountant, he will call the customer once, call the customer twice. He is not able to persuade the customer to pay money. He cannot convince the customer to pay money. And probably he will become unreasonable sometimes. And he will destroy the relationship because he will use some rude words. He will lose his patience. He is not a collecting agent. And therefore, on the 3rd phone call, or the 3rd or 4th query to the customer, he might say something which will destroy my relationship with my customer. And then my customer will give me a call that, Mr. Ali, somebody called from your company and they were not really, their behavior was not appropriate. And I would say, I'm sorry, sir, he is a young boy. He didn't know what to say. And no problem. I know you, you know me. No problem. You pay next month. I will talk to him. I will explain him. This is exactly what happens in real life. Factors are professional. They do the job. So they don't destroy your relationship with the customer. And they also bring the money in time, because this is what they are experienced in doing so. And this is their skill. So this is factor has specialized skills. So we bring in factors here, okay? Number three, this is a 6-mark question. So I can see that we can have 3 reasons. You can't have 6 points for 6 marks. So usually in ACC exams, you have 2 marks for 1 point, or maybe 1.5 marks for 1 point. So it means that 3 or maximum 4 reasons will be, enough. I will say that improved liquidity. So it's not only about making this gain. It is not only about making this gain. We do make some financial gain as well. But our 1 point is improved liquidity. We say after entering into an arrangement with the factor, Oscar company will have an improved liquidity position, and that improved liquidity, or that sufficiency of the funds, will enable company to save on their cost, to not only to save on their cost, but also to release the tension and pressure within the business environment. And they will be able to honor their commitments in time, and it will help them to have smooth operations of the business. So liquidity, when I say that you are saving money here, that is one side of the story. Another is that when you have enough funds, your operational environment, it improves, okay? This is another option another thing with the factoring. I think these 3 reasons are enough. If you put 3 reasons, I can think about a 4th one or a 5th one as well, because sometimes you have 1.5 marks here. Okay, one reason which will always be mentioned in a factoring, because when you will go to the academic theoretical text of factoring, what are the benefits of factoring? That is very important. And that is what we say is borrow as you grow. Borrow as you grow. You might be changing the name of this heading, but I just mentioned you because I remember it like this. When you are growing, the factor is giving you 80%. What the factor is saying that I will be giving you a certain amount on the invoices, and then you will take that as financing. So your borrowing, actually, it is linked to the growth. So when you are growing more, you are borrowing more. And when you are not having so many sales, you also do not have so many liabilities. If you go and take a loan from the bank, that will have a fixed borrowing, and you have to pay that fixed interest, okay? For example, I go and I take $1 million loan from a bank. I have to pay interest to the bank. Whether I make sales or I don't make sales, I have to pay money to the bank. But when I talk with the factor will only give me loan when I make a sale. Every time I make a sale, they give me 80%. If I make bigger sales, they give me more loan because I have to pay them interest. And if I don't make any sale, they don't give me any money, so I don't have any loans. So borrow as you grow. So your borrowings, they become in line with your revenue. And this means that you are actually, although factors, they are charging higher interest than the bank, factors are charging bigger or higher interest than the banks. But ultimately, it costs you less because you will only borrow when it is needed, and you will only borrow how much it is needed. So this is a very common, benefit of using factoring services. So very common factors are free. This free the management is in this example. In many questions, this free the management you will not see. Because here in this scenario, they told you that the managers are chasing the invoices somewhere, chasing customers, but not every time it will happen. So in this scenario, actually, this one is something which is scenario related. But these three are always, whenever they have to ask you to justify or comment why you should be doing factoring, these are the reasons which you should always be giving. So these are the three general conditions. And the red one, the number one, is that specific to this situation.